What's the best option for a 67-year-old? Hi, my father is getting older in age and doesn't have any savings built up. I was telling him about life insurance. What are the best companies to go to, or is it even worth it given his age? Open to all inputs. Thank you.
Well, it depends upon what he can afford to do. I mean, if he hadn't saved a dime, obviously he's either been a spendthrift or not responsible for his financial well-being. But if he's in reasonable health, he can find an insurance broker who can submit I call it an informal inquiry, or he can submit it for underwriting without making a commitment, have the insurance company review his medical records. And today they've gotten so sophisticated, a lot of this can be done online where they submit the information. The insurance company will either obtain his medical records or today, believe it or not, there's a database where they can go in with your social security number and they can see your prescription history. And they'll know if you've been taking something that is not really good for you health-wise, that helps them determine the underwriting requirements that they need. If you get a reasonably good health, they'll issue coverage. But if they find that you've been taking some bad medications, they may send you through a full paramedical exam, which is just nothing but a nurse asking questions. They draw blood, have you void urine for testing, and then they make a decision.
Well, so even just based on this person's age, wouldn't any type of plan be quite expensive?
Oh, it's going to be costly, yes, depending upon the death benefit.
Right.
One thing people need to be real careful of, you see these ads on TV at midnight or 10 o'clock at night or 2 o'clock in the morning. You're talking about, we guarantee to issue you $10,000 of coverage. One, those kind of plans are very expensive because what they do is they say, okay, we're going to insure you for $10,000, but if you die the first year, we're only going to pay $2,000. If you live
a lot of ifs, ands, and buts, huh?
Yeah, if you live 2 years, we'll pay $4,000. And all the way up, typically you'll see in 5 years, you'll get 100% of the benefit. Well, that's the insurance company hedging the risk, meaning that, if you're terminally ill and they're going to guarantee issue you $10,000 of coverage, no, it ain't going to happen. They're pooling a lot of people like that person and actuarially they're betting that they can make money for the long haul, and they do. And it's not the best option. If physically you can qualify for plans, then you can, get that behind you and then say, okay, what options do I have? Do I buy 10-year term insurance? Do I buy whole life? Do I buy universal life? The permanent plans at the premium stay level for the long haul are typically initially going to be more expensive, but for the long haul, less expensive because you do build up some residual value. Term insurance is just what the word means, term of time.
Can you clear this up for everyone? Like the fact that life insurance, like these are for-profit companies that are looking into all of the actuary, meaning math work of all dangers and aspects of life. And the reason why people would get life insurance is in case of a premature death based on their math.
They are positioning themselves to actuarially make a profit because, that's why they pool the risk, meaning let's say they take 100 people in the pool, they're going to have some of them die real soon, but they're also going to have some of them that are going to live for a long period of time. So the premiums represent their ability to offset the risk. And so that's where they make the profit, but they're also able to pay the death benefit. And those that live too long, meaning, for the real long period of time, those are the more profitable ones for the insurance company. But, the case I discussed earlier, that insurance was in effect probably a year and a half. And the death benefit was a serious 7-figure amount. So the insurance company did not make any money, but they had all these other people in the same pool that, offset their risk. That's what insurance is about, spreading the risk over a large number of people. They've been around for 150 years plus, so nobody's going to be giving it away except the government.